We just had the worst 1 week in the stock markets. We had just the worst fortnight in September, and we had just had the worst month for September 2022 for the markets. What about for S3s? Yes, it coincided with the worst quarter, as well as it has coincided with the worst year-to-date performance in the first 9 months of this year. So how does this market malaise compared to previous crises? More importantly, when was the last time when we saw such a 1 month wreck on the markets? And most importantly, again, where do we go from here and how do we position? Now, mind you, ladies and gentlemen, if you're feeling down, disappointed, do understand that the stock market is just like sailing a boat. The winds of change blow for all of us. But where we end up, whether it's actually further from the shore, nearer to the sea, or out in the open sea, depends on how you have positioned your investment portfolio previously. And that's where we at GCP Global specializes in actually helping you to find your anchors. So do stay on this video as we actually examine for you how September has been and what lies ahead. As usual, do like us, subscribe, and be notified of all new videos that's expected to come out each week so that be well informed on how you do your financial management so that you can, like us, make your millions in real estate investment trusts. The global financial crisis in 2008. What lies ahead for you, the smart and savvy REIT investor? Now, before that, let's look at the worst performing REITs as well as the 10 best performing REITs and how were you able to actually predict that? Now, first and foremost, ladies and gentlemen, you notice that the worst performing REITs is digital core REIT. You notice that this is actually, it suffered a loss of 40% in just a single year, 40% down in a single year. And this actually rings true to our warning where we have actually warned previously that it is actually highly possible that the digital core REIT will be, the share price will crash. And indeed, the share price has crashed. So once again, if you want to be forewarned on such REITs underperforming or overperforming before it happens, do subscribe to our YouTube video. And then looking again, ladies and gentlemen, you can see that the second and third worst performing REITs is Manulife REIT and Prime REIT. Both are actually down by 36%, right? And once again, if you read and see our YouTube videos as we have warned since the beginning of the year, we have warned and told you that US office REITs, particularly Manulife and Prime REIT, which have raised in between them 5 rounds of secondary equity funding since their respective listings, they are likely to be value traps. This was actually predicted at the beginning of the year. And true enough, what happened this year? You can see that the year-to-date 9-month performance, they are down by as much as 36%. Whoa! So it is actually a terrible, terrible fall. And then for the rest of the REITs, you can see these gentlemen, you notice that elite commercial REIT, because all the assets are actually in the UK, actually suffered just from last week. Huge underperformance because of the new government insistence on the new budget, and you can see that effectively that hits the share price sharply. And then Cromwell REIT, one REIT that we have been warning since last year, as well as in my book, Making Your Millions in REITs, you notice that essentially this the exposure towards European assets, being Finland, Germany, Denmark, and a few other places like Poland, are heavily hit since the war with Ukraine. So once again, ladies and gentlemen, it's not surprising that if you have been a studious, smart, and savvy investor in real estate investment trust, you would have avoided this average 30% loss, average 40% loss among the top 3 users of real estate investment trust for the first half of this year. Of course, such are the REITs that we warn about in our investment class, and you can actually sign up for our investment class. The next one is on 26th November to be held at Orchard, Singapore, Hilton. Now, of course, ladies and gentlemen, if you look at the other outperforming REITs, you notice that to make up the top 10 REITs, unfortunately, seven out of the top 10 performers are actually registered losses. But if you take into account the year end dividend, for example, we look at Fraser's Enterprise Trust, the total year dividend is about 6%. So you're practically flat, so to speak. This, together with the other REITs like Ascot, MIT, Capital ICT, and Suntec have been our picks, for this year, because this year is going to be or has been a very tough year, But looking back, way back in 2018, the moment interest rates are seen to have peaked, you notice that these resilient REITs are the first to be going out of the gateway. That means basically their share prices are just going to run after that. So the key point, ladies and gentlemen, therefore, is to identify which is the turning point as the market tends to actually encapsulate and try to speculate on when interest rates are likely to peak. And this is something again we will cover in detail in our investment class next on the 26th. And you can see, ladies and gentlemen, that some of the REIT that we have met up with, like CDL Hotel Trust, is the second best performing REIT in this year. Now, earlier in this year, in June, we actually caught up with Mr. Vincent Yeo, who is the CEO of City Hotel Trust, as well as Ms. Mandy Koo, the head of investor relations at City Hospitality Trust. So you can see, ladies and gentlemen, to be very clear about where and to identify which are the REITs that will perform or underperform, other than being a very smart and savvy investor, one actually follows, well, we at GCP Global follows the REITs very closely, as in basically we catch up with the REIT managers and CEOs regularly to identify key trends, key occupancies, as well as obtain updates. And this is something that we present in our GCP Global investment classes so that you can make an objective assessment of the latest in real estate investment trust, and therefore to actually eke out a very good profitable return. So of course, if you like what you see, do join us on 26th of November 2022. We're glad that OUE Group is actually the venue sponsor at Hilton Singapore Orchard for our next class. Once again, you can see, ladies and gentlemen, that again it is every time when we have a gathering. This is a lunch gathering in Sessionhampton in Hilton, Singapore, a two-star Michelin. You notice that we always find reasons to celebrate because we have been able to avoid capital losses. And of course, in this photograph, you notice that this is actually Miss Ng Xueling, as well as this is actually Mr. Kelvin Chu, the CEO and the chairman of Lendlease. If you look at the list earlier on, you'll notice that Lendlease REIT has been one of the outperformer. Notice that for us to keep abreast of the current developments of REITs actually help us to actually stay forward and making sure that you avoid the losers and ride on the winners in real estate investment trust. Exactly what we have predicted in our article in the Business Times, where what does S-REIT has survived COVID-19 and what lies ahead as that was that we predicted this challenging time pertaining to interest rates increases. But take heart, ladies and gentlemen, it's not something that's not new to the market. This is the third time in which the REIT market have experienced interest rate spikes and increases. The first was actually in June 2004 right up to June 2006. Second one was actually from 17th of December 2015 right up to 20th of December 2018. In both episodes, rates suffered initially. But once the climax of interest rates are seen to be hit, this is where the rates will just pop out of the gates. And this is something that you want to be prepared for because this is how you make your millions in REITs. So do join us and subscribe to our channel. March, when I was interviewed in the Business Times, what did we say? We actually calculated that as much as 400 million had been destroyed, capital destruction, via the various REITs acquisition programs, which were then financed by cheap issue shares. Well, first and foremost, the REITs basically, if they have gone on an acquisition brink, they need to finance, these acquisitions using new equity. And in order for this new equity to succeed in going to the market, they have to come out to close to 10% discount in terms of the placement of new shares. But does it necessarily benefit shareholders? Well, in the presentation materials, they tell you how good the assets is, how the DPU is. But in our March article, we have really warned that many of the REITs that actually have been exhibiting near term, of 50-50 kind of acquisitions will actually find greater impetus to justify their, their acquisition attempt and therefore justify the price that they are issuing new equity. But remember, ladies and gentlemen, if a REIT issues shares below its NAV to finance whatever acquisitions, what is the hallmark on on the REIT? Yes, it is capital destruction. And contrary to what the many of the REIT managers will actually tell you, it does it does dilute shareholders' interests. So at any time, if any of the REIT managers say that, yeah, they are not looking to dilute you, the first thing you ask is that why are you issuing new equity at below the NAV, which is dilutive in nature, right? So unless the acquisition actually enhances DPU by more than 20%, it is very difficult to justify that. And that's where we at GCP Global specializes in finding situations like this and warning this to many of our investor students. So once again, hope you can join us for our next class. That's on 26th November. We are very grateful that it will be held at Orchard Singapore Hilton. And that's because the OUE Group has actually become our venue sponsor for this event. We are very thankful to them on this. I think it is actually a very good indication of how they have recognized our investors' education initiatives so to protect and help you to grow your wealth through real estate investment trust consistently and clearly.